To build anything that truly lasts, it takes time.
Joined by Mr. Sunil Subramaniam, independent market expert. Sir, thanks so much for taking your time out and joining us. We've barely seen any action on the index level over the last few days. Perhaps everyone is waiting for some more action on the tariff war front. But what will your view be on the market and any sector-specific ideas that you can share with us?
I think we are just at the beginning of the earnings season with later today the IT bigwig going to report. So I think everybody is waiting with bated breath to see how the earnings season pans out. Yes, the BTA till yesterday, the BTA was top of mind, but I think the news that's coming out over the last day or two that I don't think we are going to see a deal in a hurry because one is of course is that Mr. Trump has been issuing letters to a whole bunch of countries. India is not there in the letter, but the noises are coming are mixed. On the one hand, he says, I'm going to do a big deal with India. On the other hand, he talks about India importing Russian oil, that he'll put a 500% surcharge. The other hand, he says in the BRICS, if you're going to promote de-dollarization, I'll slap another 10%. Then he's talking about copper, pharma. So I think there are mixed signals, and it's clear from the Indian side also. I think the trade secretary and the team is again going back to the US for talks. So I think now the BTA has gone off the radar in the sense it's not going to happen immediately. And even the noise coming around is that there's going to be a three-part deal. There's going to be an interim deal, maybe over the next 2 weeks or so. Then there will be what do they call phase one deal by September, October. And the real tough situations will probably take by end of year to solve. So clearly the BTA doesn't look like it's happening in a hurry. That's the big change in the market over the last couple of days, because the last couple of days everybody been sitting up late saying, is the deal going to be signed in midnight and all of that? But clearly it's proved to be a false alarm. So to that extent, whatever had built up around the expectation of the BTA is going through some amount of corrections. So you're seeing that volatility. Second, you saw that the mutual fund inflows have come in very strongly. The SIP book has touched a record high. Plus, there's about 25% month-on-month increase in net flows into equity. So domestic fund managers obviously are sitting on a lot of cash, but they're not going to deploy it in a hurry because now the situation is going to be stock specific. Obviously, they'll be wary about the export oriented because BTA, if it's not going to get signed, then the uncertainty will continue. So the focus will be clearly on the domestic sectors as opposed to export oriented sectors. And within domestic, I think the two key things are supportive rate cut by the RBI and liquidity infusion. What's the effect on rate sensitives? Second is the flow through of the 1 lakh crore of the tax savings to the middle class in the budget. Where are people spending it, or are they saving it? The initial reports from the banking side indicates that deposits are growing strongly and credit growth is not happening. So eager to wait and see how the realty, consumer durables, discretionary items, auto, all of these numbers, are they showing first of all, a good top line growth, and second, how the EPS. So I think we are entering that phase where everybody is going to be very stock specific and look for key data like the bellwethers, for example, in IT. They will lead the charge for the entire sector. So I mean, some of the big ones in sectors will probably set the direction. But my suggestion is that for the next 2 weeks, you have to wait and study these earning seasons. One good news, which I think is that in the last quarter, the guidances were very dim because of the tariff overhang. So I think that the actual numbers may turn out to be better than the guidances. So to some extent, there might be a positive fillip to the market from some of those counters. But like I said, we have to wait eagerly and watch the earnings season very closely now.
Yes, of course. I have to watch the earnings season very closely. But Sunil, I wanted to have your take on the telecom space as well, and specifically on Bharti Airtel, because it's the second straight day where the stock is seen decline, and for today it's actually the biggest loser on the Nifty 50 side. Sunil, we know that how and what kind of a multi-bagger Bharti Airtel has actually been, but give us some sense that from here on, what as per you will make Bharti Airtel move more from these levels on the higher side, because what's actually in the price is actually the subscriber addition that Bharti Airtel has shown, what they have done on the 5G front, and their investment plans on the 6G, and well, of course, on the AGR issue as well. They're not much impacted. Give us your sense on Bharti Airtel. What as per you could be the key growth drivers, if at all?
Well, I'm sorry, I can't talk stock specific because I don't have a registration with SEBI and I don't track stocks as such.
All
So
right, but your take on the telecom space, still bullish?
See, overall telecom space, I'm bullish, but as you know, it's a very oligopoly. There are three players, and one of them, as you know, is very challenged, seeking government support. The other one, of course, has been the aggressor in the plague. And I think being a dedicated telecom players, they are going to be much more volatile. The penetration and the overall numbers for the telecom sector, I'm fairly bullish on. But how the competitive forces at play between the three big players there is very, very hard to say. So if you ask me, right, I would be a buyer in telecom, but I would then spread my investments across all the players there and not try to pick a winner. I think that's the best way, because the moment you point out one as a loser, you know that the other is a winner. So, right. So rather than go and pick one, I think there's to play the whole segment there. And I am overall bullish on the space because I think that penetration has still way to go, and I think pricing power will be with them in the days to come. Beyond that, like I said, I don't want to comment on specific stocks of that.
Okay, so that's the view coming in on the telecom sector, but let's just focus then. And a big boost coming in for green financiers. The government has now cleared IREDA to issue capital gains bonds under Section 54 EC of the Income Tax Act, and this move will put IREDA in line with other financiers, REC and PFC. ET Now had told you first in September last year. My colleague Prakash is now joining us with more details on this. Prakash, over to you.
Yes, a big development coming in, and it's a confirmation of our news break as well, as the government has allowed IREDA to issue capital gain bonds covered under the Income Tax Act 1961. A very significant development coming in. In fact, the company can raise funds through capital gain bonds. ET Now had reported earlier about the proposal which was being considered by the Finance Ministry on the request of Ministry of New and Renewable Energy. Now, after taking all factors into account, the government has granted Section 54 EC tax benefit status to IREDA bonds in line with companies such as REC and PFC. In fact, the Finance Ministry has notified bonds issued by IREDA as long-term specified asset under Section 54 EC of the Income Tax Act 1961. As you are aware that the NBFCs such as REC, PFC are already issuing capital gain bonds where it allows investors to save on capital gains tax. This move is very crucial in order to achieve 500 gigawatt renewable energy target by 2030, where renewable energy sector is expected to receive approximately rupees 30 lakh crore investment in next 5 years, out of which rupees 12 lakh crore investment is likely to be drawn from NBFCs.
So that's the word coming in on IREDA. Thanks so much, Prakash, for joining us with all those details. But in fact, we also have a report that has come in on these power financing companies. Morgan Stanley has come out with a report, and they believe that both PFC and REC are at an attractive entry point. They've initiated PFC with a target price of 508, which is 21% upside from the current market price, and REC with a target price of 485, which is 23% upside from yesterday's closing market price. Kunal, your view on both these power financing companies, PFC and REC, on the charts?
Yeah, I think out of the two, we earlier used to, bucket up both stocks in a very similar kind of a category where in terms of price performance, both of them, they tend to mirror each other. But then I think right now we are seeing PFC being a slight outperformer. The stock is nearing, or I think if I'm not wrong, has already confirmed a break of its 200 DMA. And also I think on the verge of a breakout of a 3-month, 5-month swing resistance. REC on the other hand, the stock is still struggling. It's trading below the 400 mark, and over the last, I think, many months, we've seen the stock to be an underperformer. So I would probably believe that PFC could be a better bet at current levels of 430.
All right, so that's the take coming in on PFC as well as RSC. Yes, of course, both the stocks have shown great momentum in today's trading session and has been holding on to those good gains. But the other stock that will be in focus is actually Avenue Supermarts, because of late the stock has shown momentum, but the earnings are due on 11th of July, that is coming tomorrow. So let's understand from Snehi that what the street is penciling in with respect to D-Mart numbers. Snehi, over to you.
Well, yes, all eyes are going to be on Avenue Supermarts, or D-Mart as we popularly know it, the company's Q1 FY26 earnings. Remember, when the company recently came out with its Q1 FY26 updates, it was tad below street expectations and the stock didn't do very well that day. So here's what we're penciling in for D-Mart's Q1 FY26 earnings. Based on the revenue provided by the company in their update, this number was at 15,932 crores compared to 13,712 crores, which is an uptick of 16.2%. Based on this number, we're seeing EBITDA at 1,348 crores compared to 1,221 crores, which is an uptick of about 10.5%. Net profit is seen at 874 crores compared to 812 crores, which is up about 7.5% on a year-on-year basis. Now, based on these margins, we're seeing at 8.4% this time compared to 8.9%. So a 50 bips cut on that front, a 0.5% cut is what we're seeing over there. Remember, the company has added 9 stores in Q1 and the total store count is 424. So watch out for that as well. In terms of key expectations, continued high wage cost and weak sales per square foot are expected to weigh on margins. That is why we are expecting some margin pressure this time. And in terms of like-to-like growth or the same-store sales growth, it's expected to be in mid to high single digits. What's going to be important to watch out for when the numbers do come out? The like-to-like growth is going to be important to watch out for. The company's outlook on general merchandise and apparel will be important to watch out for. Commentary on impact of e-commerce and quick commerce will be important to watch, and store expansion plans for FY26 will be a key monitorable as well. So watch out for D-Mart when the numbers do come out. We're expecting a slightly mixed set of numbers from the company.
All right, thank you so much, Snehi, for getting us all those details. So indeed, all eyes on Avenue Supermarts. But Kunal, a quick chart check by you. How do you see the stock on technical front?
Yeah, it's been one of the most stronger stocks in the last 2-3 months. I remember a phase where the stock was beaten down some 500 to 700 points recently, I think from 5,500 levels towards a point when the stock had fallen down to 5,000 mark or sub that. But I believe that every time the stock has been met with a lot of selling pressure, it's managed to make a good comeback. Even in the last I think 5-7 days, we've seen the stock correcting from 4,500 to now current levels of sub 4,200, which means that there could be a chance that the stock may make a strong comeback and cross the levels of 4,500 plus subsequently over the next couple of weeks. So bullish on the stock, and a classical a chart where we look at more of buy on dips rather than a momentum breakout over here.
Okay, so that's the view coming in on Avenue Supermart ahead of its results. The stock continues to remain in focus. But Mr. Subramaniam, coming to you then, both of these AMC stocks are buzzing in trade today. We have HDFC AMC and UTI AMC, both of them trading with gains. HDFC AMC, they're up for you on your screens, up 1.5%. Your view on the entire AMC sector and what kind of outlook the sector has going forward?
I think I'm very positive on the overall AMC space, and there are multiple reasons for that. So first of all is that there was a recent SEBI circular where they permitted the AMCs now to offer advisory services to foreign FPIs, right? So I think that was not earlier allowed because you needed a separate license, PMS license for that. But this recent circular, they floated a consultation paper. And so effectively what they can do is non-broad-based funds, also they can be advisors. So to that extent, it will be a huge boost to them because the skill set of the fund managers are already there. The funds are already there. If they're going to replicate the funds for foreigners and make some additional revenue, there's no addition to the cost factor there, but a straight addition to top line. So that's a huge positive for the AMC space. The second is the 1 lakh crores that we spoke about of the giveaway, right? And you're seeing the SIP grow month on month. So clearly you'll see that people are going to take a portion of the 1 lakh crore and put it into savings and mutual funds. I think the way the markets have kind of held up despite the international uncertainty around global tariff as well as geopolitics, I think has reinforced the confidence of the retail investor in the Indian markets. And today's data shows SIP touching a record high and month on month flowing up 34%. Who's going to be the beneficiary of this? Directly the asset management companies, are going to be the beneficiaries of this. And third is, of course, the story is one of mutual fund penetration. We have less than 5 crore unique PANs here on a 140 crore population. So the sky is the limit for growth. The fourth point here again is the launch of a new asset class called the specialized investment funds, which SEBI has permitted to do. And I think starting early next month, you'll see the AMC starting to launch. These are brilliant products positioned between the PMS and AIF and the retail investor with a low entry level of only 10 lakh rupees. So I think this is going to help them take business from the PMS side and bring it into the mutual fund space. So clearly an additional revenue line is building up for the asset management space. So I think overall, from all of these perspectives, I'm very, very bullish on the overall asset management industry in terms of future growth. And I see that there are also a few new listings which will happen during the course of this year from that space, which would create the depth for you to build a portfolio around these financial market intermediary players.
So interesting take coming in on AMCs. Let's watch out for that. But moving on to another exclusive then, wherein government sources have told ET Now that ITBI Bank divestment is likely to be completed by December. Meanwhile, PSU banks are looking to raise funds via QIP. And my colleague Prakash is here with more details on this one. Prakash.
Yes, it's a significant development on IDBI Bank disinvestment, and the sources are suggesting that the process is on right track and the government is moving ahead in the right direction. In fact, the financial bids will be invited at the appropriate time. Government is planning to complete the transaction by October-November this year, or in any case by end of December 2025. So it's a significant development coming in as the government is moving ahead with a clear deadline to complete the transaction. In addition to that, sources are also indicating that the PSU banks will raise approximately 45,000 crore in the current financial year through QIP. In fact, SBI will soon launch a QIP to raise approximately 20,000 crore. DFS has already given approval for LIC OFS, and DIPAM will initiate the process. In addition to that, sources are also indicating that India is planning to have at least 2-3 large banks among the top 10 globally, as a country needs more banks as the economy is growing. And the government is very much clear with the objective that of course all the necessary support will be provided to the banks and NBFCs. Large NBFC want banking license with some relaxation in shareholding norms. Of course, the formal discussion will be initiated, and the government is very clear that the new bank licenses could be given to NBFCs and small finance banks going forward.
Prakash, thanks so much for joining us with all those details. The stock is absolutely flat today, but trading with some amount of gains for the full year. But Aditya Arora is back with us. Aditya, just 8 or 9 odd minutes to go for the trading day to end. What will your BTST or STBT call be?
My BTSC call is on EU Bank itself. The stock is consolidating and making higher high on the lower time frame. So this is a buy candidate at current market price of 828.28. Stop loss is 805 and the target is 850 to 860. So this is on the buy side. And on the sell side, Apollo Hospital is actually trading in a negative trend. So this one is a sell candidate at 7354 and stop loss is 7450 and target is 7250.
Okay, so a sell call coming in on Apollo Hospital, so with a target price of 7250. Kunal, what will your BTST or STBT call be today?
So it will be BTST calls, 2 buy calls, which I am suggesting. The first is a Bahan Container Corporation for a short-term target of 640, revised it on the upside, and stop loss now could be trailed to 620. And Bajaj Finance is something which still looks attractive at current levels, so would look out for 975 as a target, stop loss at 935.
Alright, so those are the buy calls coming in from Kunal. Let's watch out for that. So just a few minutes left for the markets to shut shop, and we are actually ending in the red because Nifty 50 has broken below that 25,400 mark as well, hovering around that 25,350 odd levels, while for Nifty Bank as well, we are at the day's lowest point with 250 point of cut as we speak. speak. But within the pharma space, one of the stocks that has been the key outperformer has been Glenmark Pharma. And Kunal, quickly I wanted to have a chart check by you as well, because I believe it's a life high level coming in on Glenmark Pharma, a 5% jump over there, while the rest of the pack is reeling under pressure. What's your overall sense that from these 1900 levels, how do you see the stock moving higher, or is it already in the overbought territory zone?
Well, I think it's not in the overbought territory zone as of now, because when I look at the weekly, monthly charts for Glenmark Pharma, the stock still seems to be into a zone where the RSIs are in the upwards of 60s and early 70s, highs 60s and early 70s. So I think in that sense, I would believe that there should be more scope for the stock to go on the upside. Glenmark was something which I had recommended almost a week out back. But I believe that even at current levels, the momentum is on its side. There was a couple of days of pause or a mild correction to the stock in the last 2 days, but then the way the stock has managed to make a comeback indicates that the near to medium term trend is extremely bullish for Glenmark Pharma. So a stock which looks bullish, and this is how generally we expect stock specific trends to behave, where there could be a point where stocks can diverge completely with respect to the overall sector, which is happening in the case of Pharma Pack.
All right, so that's the take coming in on the pharma space as well as Glenmark Pharma. But in today's trading session, select pockets have been doing really well. AMCs we just highlighted. Other than that, select railway counters like Rallis and Titagarh, they have been doing well. Along with that, select power financiers have been holding up well, and within the pharma pack, Shilpa Medicare is also one of the other counters that has been one of the strong movers. But yes, a lot of this expiry related action was also in play for today, specifically with respect to Nifty 50, and let's see that whether or not today we are able to crack a deal between India and US with respect to the tariff announcements, because every day that is one of the announcements that we will be waiting out for, and along with that, TCS can also give some direction to the market, specifically the IT pack. That will be interesting to watch out for as well. But Sunil, today we have seen a bit of a fall coming in on Asian Paints, and just wanted to quickly have your take on the paint sector overall, given the fact that the deal is through, the sector has been lagging behind in terms of the volume and the price growth. But some of these stocks within the paint sector, they have been inching higher. What, as per you, are the factors at play for the paint sector? And in this sector, do you believe that investors can go ahead and find an opportunity?
So I think it's an interesting sector, basically because you see the consumer discretionary story clearly impacts favorably the paint sector, right? It's directly linked. It's a building materials part, and it's also now with the high-end paints, people are making active choices, choosing the decorative paints and all of that. But what's hurt that sector is, I think, that there's been the entry of too many new players. Everybody now wants to enter into it, given the attraction of this scenario. So I think that competitive pressures are playing on the price. That's number one. Second is, as you heard, that there's been a challenge about monopoly action in that sector. And so that's a regulatory uncertainty over that until that plays out. Third is the immediate short-term outlook would probably not be positive, because of the fact that as a monsoon comes up, you expect construction and building activity to ease down. So you would probably see in the next quarter or so, till the monsoon plays out, the top line numbers are probably not going to show great. But that being said, from a medium term perspective, it's clearly linked to the realty sector and to the industrial growth, because even industrial expansion needs paints to be done. So from that point of view, linking with the private capex expansion, which you expect to get over the next year and a half, I would retain a very positive view on this sector. Keep the near term. There will be consolidation, there will be volatility. So I would say you keep buying on dips through this. And again, back to what I said in telecom, you please diversify across all the players who are involved in this and try not to pick a winner, because it's going to be a very cutthroat competition out in the marketplace in this period. And you're better off playing this in a diversified way across the players, but hang in there and keep buying it on dips over the volatility that you'll see over the next few months. Of course, the earnings season will also give us a clue as to which one of them are doing better than the others.
The view coming in on the paint sector, buy on dips. But Mr. Subramaniam and Kunal, thanks so much for taking your time out, and even Aditya, thanks so much for joining us with your stock specific ideas.